Good morning, everybody. Good morning. We have the market is rallying today. Hopefully, the war is over. Just want to make sure I'm live. There we go. Let's double check the subscriptions. Well, as you guys see, everything have gapped up today and got that big. So I'm not. Well, as you guys see, everything have. Okay, we're live. So the market gaps like this, it might continue going up on this good news. You just need to have the strategy going to be, you just need to have something that gapped, but as close as possible to the SMAs where it have a chance to continue. So 677, that's way up there. That's way in the golds. Okay. Let's see Apple. 259. Ooh. It's right here. All right, let's see NVIDIA. 184. NVIDIA is kind of acceptable, but already ran. Like we're basically looking for something that got but close to the SMAs. That's what we're looking for. That's what we're trying to find. Desk. Where is it? It's gonna open? It's gonna open 98. Disney doesn't look that bad. Uber. 75. AMD. 232. Would love to find something that opened here, somewhere on here. 232. Oof. Oh, never mind. Oracle. Everything literally gapped like $10 and $20 and $15. Oracle gap 7. SPY gapped up. It closed at 60, got up $16. All gain points like they. Serum, wow, another $6. Boeing, 218, 210. We might have a rally today. It might continue running. JPM, 306, 297. Tesla. Tesla gapped another $20 too. Netflix 99. All right, guys. This here is not. Netflix is not that bad. Netflix is not that bad. Let this thing over right here. Let's see. Okay. I don't believe in that drop. Wow. Let's see. Let's let that first minute roll. Oh, it gapped up like freaking $10. IBM, gap top. What else? I think this is a liquidity grab right here. Um, they might go after these guys right here, but I still like it. I'm gonna take it one long. I have to reload here in order for it to work. Hopefully we show our position. There we go. Okay. There we go. I really like this play right here. I'm gonna do another buy right here. Everything is just squeezed from that gap. Okay, that is fine. I'm gonna buy another one right here and another one right there. Middle of this sucker. Hopefully we got him in. Okay. Flex still showing. Okay, let me reload this. It's kind of delayed, so. Okay, beautiful. There you go. They took all the stops right here. I'm gonna add another one right here. That's nothing. It's not gonna scare me. It's still not giving me that 100 shares. Why is it still doing that? Okay, go to modify the order. Okay, let's cancel that. I have to reload. Okay, they gave me 300. See, that's what I'm waiting on, guys, right here. They took these guys out. They took everybody out. They might reverse not to here. Okay, let's see. On the 2 minute, it looks scary, but it's not. Rejected the order. Okay, if we can get out of this Tesla, we can do some damage on this trading. We have to stick to the game. Let's see everything else. Okay, everything's gonna dump a little bit. Everybody's gonna take profit this morning. Okay, everything is rallying. Of course, Exxon is gonna take a hit. Oil, serum. Yeah, everybody's taking profits. Even Tesla, they're taking profits. Netflix, IBM, ETC, they're taking profits. Let's see. There we go. Let's see if this is going to rally back now. was trying to put my limit orders right here, but it won't give it to me. Should rally right here. We got support at 97.13 on Netflix on the 10-minute, and we got it at the 15 at 95.89. This might be their target. It's the other 1 hour. Or might be their target right here, which is 95.89. It's on that. 95.89. You gotta liquidate these guys right here. Made some coffee and tea at the same time today. I don't know why. Let's see. Like I said, this is an old position on Tesla. And we're not touching that right now till it goes green. But so far, Netflix is recovering. I'm hoping to retrace back up here. I just don't believe in this move right here. They took these guys out right here. They liquidated everybody. Okay. Let's go back to the 2-minute. I was hoping the drop was like this much. Wasn't expecting that much of a drop. They just whacked everybody. I mean, they took profit basically. You woke up this morning. Imagine you waking up this morning. You were here, and you're profitable like $2. You're gonna take it. That's why a lot of people get confused why the market is gapped up here and in the morning, and why did it drop, and everybody says, oh, it's manipulation. No, it's not. Just think of yourself that you went to sleep, you bought here, and you went to sleep and it gapped up here. You got an easy $2. What are you going to do? You're just going to execute and sell it. But since the war ended, it might it'd be another opportunity for people to purchase. Like, oh man, this is cheap right now. Let me pick some. So they buy the dip hard. Usually these plays, you have two choices. It either comes back to the 50%, and if it's a true short, it'll continue down. If it's not a true short, it'll continue pushing up. Let's see. So I'm going to go ahead and put my stop right here. If it goes to break even, I might take one off for protection. I wanted to add more, but I couldn't because I would drop my average right to here. I couldn't do that. I was looking for music, I missed it. I was going to reduce my position a little bit, and then if it dips, add to it. I liquidated these guys right here. I'm gonna take one off right here. I know it's no profit, but we're approaching the 200. If it dips and it recovers, I'll add it. But if it continues going up to here, that'd be nice. I might take another one right here. Now I am within my risk, and I got Apple, Nvidia. Might close that gap right here. Volunteer, dumped. 150. See, like if you wake up this morning and you found Volunteer, you made 100, like literally make $5. What are you gonna do? You're gonna cash out. But I do like this Netflix right here. I think that's the only one is gonna rally because the gap wasn't that impressive. Everybody's taking profit. This is gonna create a flag. I mean, usually like when you have these, I don't like to trade massive gaps, just short them in the morning. After that, it might just stagnate as a flag. It just keeps going up and down, up and down. Because of the war, everybody dumped this thing. You give it enough room for it to play. Netflix is recovering nicely here. That's where everybody shorted right here. So if it's going to continue with the short, they might liquidate right here. So we'll pull our stop right here. Now it might double dip. I want to see how it reacts to that 8. If that 8 keeps climbing up and climbing and it gets rejected at the 8, usually the 8s win. I do have that strategy on my on one of my shorts. You can watch it. Basically, if you have the 200 right here and the 8 is like this, climbing, if the bar keeps hitting the 8 but never breaks it and keeps shooting back up, usually the 8 will win. So we'll see how it's going to react to this bar right here. I'll leave my stop here. Um, we're gonna see how it's gonna react to this 8 right now. Is it gonna respect it, or is it gonna keep? If it keeps bouncing and bouncing, I'm gonna add to this position going long. Usually it does it like 2 to 3 times. See how it bounced off. Let's see if it does it again. Now we switch to the 5-minute. See, it was bouncing off that 8 right there. This is a major support right here. That's a liquidation levels right here. We're gonna have a fat dip. I'm gonna take profit right here. Okay, right now I want to see if this play. I took profit already, but what I want to see what the reaction around here. See, right now all this everybody that shorted, they're exiting their position right now. To me, if it holds in this zone right here, that's a good sign this thing is going to continue. So I want to see if it holds in this side. What usually happens, it overshoots it like right to here. Let's see if it's true, and if it doesn't dump like this. Or it might continue going up. So right now, if you guys look at it, mm, we're on the 50% also right here. That's 50% of the move. Let's see. Usually market pull back to the 50% and shoots down. By the way, it's like you gotta look at everything as odds. You know, nothing is guaranteed. But usually the odds says that 50% we should pull back. But there's a lot of SMAs underneath it. So, and you got the 200 on the 5 minute. Always, whenever you have a big bar like this, cut it in half. Like this is the first third. That's the 50%. This is the 60% zone right here. 50%. If you're in a short position and the stock moves all the way to here, or right to here, or anywhere around here, wait for a pullback and get the hell out of Dodge. Because this thing is not going to go down all the way. Any stock you're in, this is very valuable information. Any stock you're in, if it stays within below the 50% of this short, your odds of it continuing down is about 60%. If it stays within the 30%, it's an 80% odds that the stock will continue going down. At the 50%, it drops to 60%. That's why you see a lot of, right now, it's complete frozen right now. Usually would have dipped hard after they cash these guys out. But since you have the 8 and the 200, it's holding the stock. Now I need it to dip back to this 8 and the 20. It's going to do that. It's going to dip back to these guys right here. And I want to see if it retests it again. And I want to see how it bounces off that. If they have a loads of order right here. Would love for that to be curved a little bit, which is on the 2 minute there is. I switched to the 5 minute. I like trading the 5 minutes after like 30 minutes, 20 minutes in the market. It's more settled. So let's see now. It's going to dip right here. Let's see how it's going to bounce off that level right here. Is it going to rip through it all the way down, or is it going to just like touch it and bounce back? So far we're at break even right now, so You got this zone right here, so 99, 97, 99, 97, which is right here. All right, let's see if this holds. It's not a fake out. There we go. Let's see. Still have 31 seconds in this bar. There we go. Let's see, it's holding. Not bad. Shot back up. I usually look at the last seconds. Confirm for me the move or not. The move have been confirmed so far. Let's see. Second test. Okay, that's a solid bar. I'm going to go ahead and get in at 100. I'm putting 200 shares. If it dips to the 50%, I'll add another 100, but I'm not going to miss it. Just in case he shot up to that target right here. 99. This is going to be our target. Only thing I don't like, I want that 8 to move up, break from that 200. Need that 8 to break away from that 200 up. It's not moving yet. But we got a good play on the 15-minute. If you were to look at it, the 15. It's right off the SMAs right here. The reason my stops are huge because they might liquidate here and they might liquidate here, so I give myself a chance for it to work out. That's the true test right here, Marek. The one that's supposed to happen here didn't happen. There's a possibility my retest that 8. I wanted that 8 to take off on the 5 minute, but it's just lagging a little bit. It'd be much better for the position. You're supposed to be calm and collective when you're trading as much as you can. Don't take it as gambling. There we go, the 8 have moved finally. That's what I wanted, that 8 to move up. Hopefully, if this stock drops to the 8 now, it becomes the testing ground for it. And it will support this bar right here. And a trend is not like when it's trending like this, big bar should not be broken. If they got broken, it's no good. I mean, the trend is weak. But if every bar gets, like these green bars, get respected too, that's a good sign. This Tesla position missing with me so bad, bro. Would have freaking added a little bit more here. Would have made $200 right here on display. Okay, now we're gonna add here. Now with 300 shares in. Because that green, you see how that green took out that red right here? And it respected this one right here. So far it looks healthy. So we'll stay with it. Hopefully we'll reach our target. Our target is right here. I mean, my target should be right here, like 97. But it's okay. You don't want to be exact on the target. Target number 1 should be right here. What is it right here? 99.46. Why not? Let's take one off right here. 99.46. See, when you put on the 15 minutes or whatever, you can go by pivots and put your targets right there. It makes your job easier where to take profits. Because you got this pivot right here. That's where everybody shorted. So most of their stops is right here. So they're going to react right here. So you just put an order right there for you to cash out some. They cashed out right there. All the shorts got liquidated. Let's see if we survive this tail right here. Come on. Hopefully it keeps respecting the rate and it goes on a, it keeps rallying up and we hit that target, both targets. That's the only way, don't get me wrong, it might pull back. They need to pull back to create liquidity. They can push higher and higher. Look at that, guys. Look at that. If we maintain this, see how we're maintaining, respecting this big bar right here? Hopefully this will maintain itself. The only thing that's going to happen after, if this keeps getting respected right here, it might get like wicked. It'd be a quick one if the bar did not close actually. Like the 5 minute itself, if it didn't close, if it wicks within the 5 minutes, it's okay. But if it keeps respecting this right here, you have to think in your mind, hey man, where is this gonna do? It's gonna go up. Need to take that red right here. They're gonna bounce like a fire. Boom. 1, 2, 3, 4. We need, yeah, it's about close for it to continue going up. If it breaks this one right here, they might try to liquidate this right here. There's where all the stops at. Underneath this red bar right here. 90% of the stops are for this move. You have to think of it like this, guy. Just like you have to think of it like this. Okay. Think of yourself as a trader, and you went ahead and took this play right here. Where would your stop be? It's going to be right here. Okay. There's a possibility they come back right here. Take these stops out. Well, you're going to say, well, why would they want to take these stops if they are going long? When they take these stops, they create liquidity for them. You sell, they buy, they're able to fit big orders in for them to push the momentum back up and gives them incentives, hey, to make more profit. They're not going to go here like us on confirmation. They usually go right here at these stops. See that stop right here on the 15-minute? Look. They push it down a little bit, and boom, they take it long. Because when they liquidate these stops right here, it gives them the chance to enter thousands of shares. In the market, if you try to enter thousands of shares, like you will get rejected. Even I was trying to enter, like when I used to go live, when I try to go like 2,500 shares on a position, they would only give me like 1,000, 700, 900. And what they do, like the order will stop, and it's just like as the stock is moving up, they keep hitting me with like giving me more of my shares. But the problem with this is like that. So if I want to buy right here at the stop, I need to have my orders ready, and I need them to I need, like, just put limits all the way down so I can capture as much as I can when they are liquidating the stops right here. I'm purchasing right here. But if you are entering thousands of shares, let's say, like you're an institution, and there's the stop right here, which is this one right here. So you want to put all your limit orders right here and right here. And you want 99% of those orders to go in. Since what does that do for you? It limits your risk right here. So when you fill up all this and you go back to this one right here, so let's say you filled up all your orders right here, right? You would put your stop right here, so you have this amount of risk right here. Okay. On the other hand, if you understand this concept, your trading will change dramatically. But it takes time and you have to practice on it. So now, let's say that you are a retail trader like me here, waited on the confirmation, which is right here, and the bar went up like right here, right? And right when it took it, that's what they teach us, okay? Right when it confirms, you enter here, right? Let's say you have thousands and thousands of shares and you want to enter. So the liquidity was here, right? There's no more liquidity. So you try to enter, well, maybe you put a limit order. Okay, you got 200 shares, 100 shares, or whatever. But let's say you're an institution and you want to enter thousands of shares, and then all of a sudden they fill you with 1,000 shares. Then you put another order here, and you put another order here, and you put another order here, you put another order here. So what happened when you put all these orders and they all got taken, okay? If these orders get taken, what happens to your price? Instead of you buying all your shares right here, and that's your average price is right here, okay? No, now your average price is right here, okay? So if your average price is right here, well, let's say you're gonna put your stop right here, okay? So if your stop is right here, what does that do to you? That's how much risk you have right now. That's the risk that you have, okay? The R, that's your R unit. That's how much you're risking. And when you have thousands of shares, do you want to risk that much? I don't think so. Where you want to be? You want to be right here. That's the zone that's most of institution wants to be, right here. Because they're putting thousands of dollars. Also, they're catching the move way on the bottom. They're risking this much instead of risking this much. Okay? So they're risking that much instead of risking that much right here. So whenever you want to put your buying order and you think the move is over or done, put it right where everybody stops at. And don't panic when it pulls back a hair. If you would to look at charts, you will see the trend. You'll see a little fucking tail right here. They take profit, they pull the stops out, and they just continue ripping up. And that's the concept behind it. It looks like a spaghetti bowl, but right here, okay, that's the stop right here. So that's when everybody took this play long right here. Boom, 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 boom. Right. So they came in here, whacked them, right? So this is what I would do. Put a buy order right here. Put a buy order right here. Put a buy order right here, and put a buy order right here, and put a buy order right here, and I'll put my stop right there. He hits it, bounce back. I'll see how the bounce looks like, and I'll let it rip. Because they just liquidated everybody. Tons of money. Think of it as this short right here just got bought up by all the stops because you have to buy in order for you to sell. And you can see it all over. And when you want to take profit, the same thing. Taking profit is the same concept like here. So you say, okay, there's the first pivot, there's the second pivot. That's the first. So in order for me to liquidate thousands and thousands of shares, I need to hit these stops. In order for these people to exit, in order for me to liquidate half my position with ease. You know what I'm saying? So I might liquidate this one right here. My second target is right here. With one position, with all these shares, they just loaded up right here from this position. They're not going to be able to exit in the middle because there's no liquidity. If they go ahead and exit in the middle right here, what are they going to do? They're going to crash the stock. You think they're going to do that? No, they're not, because they're on their position, they're long. And when they go long, they're not going for 50 cents and 10 cents. They're going for $1, $1.50, depending on the price of the stock. Like this one right here, they probably go for $1.50. It's a $99 stock. Which is, if you look, 99.87 right here. So I bet you that's their target right here, to make $1. They literally, actually, sorry. Most of their entries is right here, right? They entered right here. That's their entries. Let's say it's $98, okay? At 99, what is it right here? 97, yeah. So they'll make $1. That's pretty good for them. You know, see also like there's also like thing in the market, like when you see a massive red like this, it does have an effect on the stock. And we are right. That's why we're struggling at that 50% right now. But the 21 is rising, the 8 is rising, so we're doing good. Finally, hopefully, we'll get a break from this war. Market doesn't like uncertainty, so now we have 14 days of certainty. I think it's over. Um, thank God. War is evil. I don't believe in wars. So let's see what happens. Hopefully things gets better. Things gets calmed down. Miss Senor Trump cuts down on his tweets. We can trade. Man, I was in a trading Tesla and he was having a fight. I'm like, why Tesla's dropping? And remember when he was fighting with, what's his name, Elon Musk? The stock keeps dropping and dropping. It's like, and then they like, oh, nothing happened. They shook hands. They whacked me with like $7,000 on that play. Thank God it was paper. See, like when you do paper, when you're practicing, and it gives you the mindset for you to practice your plays with calmness. There's no money in the line. There's not your wife looking at you. You're not wasting your kids' money, college fund, whatever. You're working at a restaurant and you're losing that $200. That's all you got, $300. No, you keep practicing and practicing. It takes 5 years. Anybody else tells you none of that, unless you're a freak, but it takes about 5 years of screen time and just practicing what you want to do. You want to practice maybe one move or two moves and build that skill where that one move you can rely on and make your money. Like every time you can lay back on this move and just make money. Every time come lean back on this move and it's like you say, this is my bread and butter. I can go in here. Then like when you're making money and you're just paying your bills on this one move, then you can venture into another move and like, hey man, I'm gonna allocate like $1,000 or $3,000 to play this move, or do it on paper after you do your live trading and you make your money, because it takes your brain about up minimum of 6 months for you to understand a new move and get it down packed in your get it down packed and like fully test it. But focus on one move. And by the way, that one move also, you want to know like, hey man, I've been taking like, there's a thing in the market where it changes, okay? The market shifts, okay? So when the market shift, you want to be aware of that. And you say, hey man, I've been making money, and then like the market shift, the structure of the market will change. A lot of people get hit with that. You want to either look at that move not as a failure, but that the structure of the market change where your move is no longer valid. So maybe instead of like you are taking profit at $1, start taking profit at 50 cents, 40 cents, because it's just like the market's kind of like fizzling. You know what I'm saying? It's weak. It's not giving you that play anymore. So you either you gotta improvise and just make sure you reduce your position. Like I've been doing this for 18 years, right? And I've learned a lot of stuff. Like I would make money, and then like September and August, uh, market completely shift. There's no juice, nothing, and I give that money back, and then come to find out, like it took me like a year and a half to understand that on those 2 months there is no, like, you take whatever the market gives you. That's that's a lot of stuff like this, or like you're on trade, like these huge gaps, or like let's say everybody thinks like, hey man, everybody's trading. A lot of people trade the earnings, and the earnings are great. Everything is numbers are massive, and you go long at that same day, but everybody already that is that money was in the future. Okay, so these people bought that company 6 or 9 months ago, and they were waiting for that last day on the earnings for the hype. And what they're going to do, they're going to take profit, because that was the the numbers on that company was in the past already. Now they're looking for the third quarter. Okay, so, and also, like when you look at companies that you want to invest long term in them, it's extremely important to look quarter by quarter at their earnings, and also at the growth. You have to see the growth. If like quarter by quarter, the numbers needs to go up. If the numbers are not going up on the growth, that means everybody's gonna pull out. Or it's like, oh, the growth was 2.6, and it's like the second year, like the third quarter, 2.6. So they're stagnating, they're not growing. But if the numbers are growing, the stock will grow with it. Those are very important. And look at the the debt to profit ratio. But the main thing, even the debt, they don't look at the debt. What you want to look at, and that's what main investors look at, is growth. What and now with growth, you can get all this information in like under a minute. You don't have to log on Google, punch the number, put the company name and all that. No. Hey, what's the growth before you make any purchase? Give me the last 3 months. Give me the last 4 months. Is this company growing? If it's not growing quarter by quarter, the market is priced 6 months in the future. It's not priced right now. Anything you're purchasing right now, it's already priced in 6 months in the future. So whenever you buy and the stock goes down and all that, it's like, why is it doing that? And the company's doing so good because the price already in the future. You're 6 months, the market is 6 months ahead of you. So just remember these little things. Growth in any company that you want. It's having a hard time. It's struggling to hit that target. I needed to take this target right here because it's going to pull back now. Might drop this a little bit. Okay, I might take profit right here. I just don't like this. It's struggling right now, right here. And this is 1, 2, 3, 4. Let's see. There's nothing wrong with taking profit. I want to put it at break even, but I know it's not going to do it. Still like it spent so much time right here. And it's already 4 bars up. So we'll do bar by bar. I'm going to do bar by bar stops. See, a lot of people look at that number when you grow, like let's say this is 2,000 share. You know what I'm saying? This would be $460 right here. Okay. So you keep doing small numbers, but when your account grows up and you take these plays, like right here, you probably would have made like it was $600. You would have made $6,800 if your enter is 2,000 shares or 3,000 shares, $680. So right now you're practicing, but the minute you get this down, all you have to do is add more shares. And you don't have to wait and suffer for long, big moves. But probably you'll be loving it so much that you're going to make more and more and more. And you have more confidence for this thing to hit your target. But as of right now, like, okay, $200, oh, you're making $32. What about if this was 2,000 shares, you know? But I just don't like these tails right here, okay? So I think we're due for, it's stagnating, so we're due for a pullback right here, which is these stops right here. Liquidate these stops. But we don't know that's going to happen or not, so I'm just going to let it do its thing. See how it does. I've been sleeping on my shoulder and leaning on my shoulder the whole time. And they come to find out they have these called stiff shoulder or whatever. And I'm taking it serious. I do these exercises while I'm training. We do have 100,000 leverage account on this paper trading. So I try to take another profit right here. Okay, I'm gonna take a profit right here. I'll wait. This one right here, I'm gonna see if I can hit my target on it. Let's see if I can hit my target right here. Man, my entry was I kind of like, this is what I'm talking about. Another mistake. I rushed in and I entered here. Should have, like, I just panicked, like, or missing out, or whatever you call it. My entry should have been here. Like I was preaching you guys. You know what I'm saying? The same way I was preaching myself. It's just like I was a little bit early on my entries, and I couldn't put enough orders. And then I keep forgetting that I have this losing position right here on Tesla, that I didn't get enough orders where I can, drop my average down a little bit more. But the problem is I rushed in instead of like, hey man, let me wait, see this stop right here. Okay. Let me see this stop right here and enter the position somewhere on here. I would have catched all the bottom all the way up there. Because I've seen, like I said, I've been doing this for 18 years. I've seen this happens a million times. Especially in the morning on the 2 minute. Most traders, they go on the 2 minutes for the opening of the day. Okay. Here comes the pullback. See that right there. I'm going to exit this position right now. I'm done here. I'm going to let it do the pullback. Most likely right to here. Why? Because they got to eliminate these guys right here. It's an easy liquidity pool. Like they're going to pull liquidity. So they're going to take all this liquidity right here. Be a quick one right to here probably. Shoot back up. Let's look at something else. See, like whenever, okay, this is a good training lesson. A lot of people get screwed on this. When the market gaps up from here to here, there's an ETR, like true average daily range. So if the true, like if Apple moves, like let's say $9 a day or whatever, already happened in the morning, okay? So don't get too excited and all that and think that the stock is going to give you another $5 or $6. No, it's not. It's just going to go in a flag like this because all the move have happened. The first it opens, if you want, your best chance, if it's way up there, is to short, not go long, short, take profits. But usually when the market gaps like this, it's just going to create a flag on most of the area. Like right now in my bonds, like see this one right here, they took massive profit on this one. This one right here, it's holding good because it's Google. See, it's flag. You try to short, it goes up. You try to go long, it goes down, but it's just like it takes all your money. There's nothing. The moves are done already. Look, $70, let's say, to say that's $8. Well, Robinhood usually move on average $8 to $4 a day. So what do you think is going to happen? Okay, they're taking profit. Now it's going to bounce back up and stay somewhere around here. But same thing here. You see it? Nothing happens. Taking profit, but nothing seriously happened. Nothing. Oracle is like struggling. Everybody's just, a lot of people got hammered on this when they announced the news and all that, and it went $346. A lot of people, when they see a little bit of money, they just exit. Same thing here. Nothing happened. The SPY. Well, because of the war, look. Boom. Man, I was thinking about buying puts on this. But they were so expensive. The thing needs to go to $121. For you to make a dime. But look, like the market reacted to the news. That's fine. But what we want is like to stay in a flag. If it stays in a flag, it's better and maintain like a 30% of the gap. That tells you it's going to continue going up. But if it goes all the way down, it tells you, hey man, we're still struggling. Here comes Netflix. It touched the 8. Let's see what happens. IBM, BTC's dumping. Everything is dumping. All right, guys. I guess we're good for the day. Maybe made like $60, but that's all the market's going to give you today. There's not much we could trade. There's no, everything gapped up and it's like it's going to stagnate all day. I don't recommend you trade after today, after this. Let's call it a day. This is just for entertainment purposes, guys. So thank you very much. We'll see you tomorrow.